Today, we answer the age-old question, how much house can I afford? We're going to dig into the math behind what it takes to buy a home and give you an idea how much you need to be making to buy a $500,000 property. And we're going to get started right now. How we doing, Gary?
Good. Let's get the whiteboard out.
We're getting the
Start looking
whiteboard
at some
out.
numbers,
We're
answering
getting the
some
whiteboard
questions. But
You
before we get
know
it-
things are picking up when the phone's ringing and it's like, hey, how much can I afford?
yeah. The other thing is if you are watching this content, you're liking the content, make sure you hit the subscribe button.
Amen.
Follow the channel. We're putting a lot of content out there. If this content is something that you like, hit the like button, hit the subscribe, comment, DM down below, and we're happy to help you answer any questions on your mortgage plan.
Awesome. Well, let's jump in.
Yeah, let's do it.
All right. So, how much do I need to make to buy a $500,000 home?
Right on.
Well, for this example, I'd say, what do you think? We look at a conventional example?
Yeah, conventional is the easiest. It's kind of straightforward as far as costs and everything are concerned. So I like the fact that let's just use round numbers. Again, just a caveat to conventional financing. First-time home buyers can go to 3% down, and previous homeowners can go to 5% down. So this is just for example. And obviously, this is all based on, having a full application, getting your credit pulled, having your income verified and assets verified. But this is just a kind of a starting place and to kind of give you an idea on numbers and what to expect.
And when we get into it too, we'll talk where if you are not doing 20% down, where PMI comes in, private mortgage insurance. So we'll talk about that as I get in. So, all right. So we're looking at a $500,000 home, 20% down. So that's $100,000 we're putting down. And so that leaves us with a loan amount of 400. So 400 is the number we're dealing with. All right. For all intents and purposes of trying to get it approved, that's what we're dealing with.
Mm-hmm.
All right. So if we're looking at a kind of roughly where interest rates are, and we're looking at a 30-year fixed mortgage, we're looking at principal and interest of $25.28. All right. So that's just bare bones without taxes and insurance. That's what your mortgage is going to cost you on a monthly basis.
Mm-hmm. Not including. Next. Yeah, there it is.
Yep. There it is. There's the dingers.
Clark's got the joystick, so.
Yeah, I got the joystick. I'm in control.
Taxes and insurance, the kicker.
So taxes, depending on where you are, look up your county property taxes. But for this example, you use $416 a month for property taxes and roughly $350 a month for homeowners insurance. I will caution you, get a quote on insurance. If you're in California, get a quote. It could be a lot higher.
Texas,
and get multiple
get a
quotes.
Quote.
And absolutely make sure you're meeting with somebody that's going to do the proper risk analysis. We're going to do a recording with an insurance broker here on Friday, so that video will be up. You'll get to see it, and we'll get some good information out of that. All right, so we're looking at principal and interest, taxes, and insurance. That gets us to a monthly total of ding 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 $32.94.27. So that is your total monthly payment. Now, taxes and insurance, Gary, are they always escrowed?
Not always escrowed. A lot of, I would say right now it's probably about 60 to 70% escrow. They build an escrow account. The other 25, 30% do not. And so what that really does is, it is a bigger cost on the front end for your closing costs because you have to fund those escrow accounts. You got to pay in advance essentially for your taxes and insurance so that when the servicer goes to pay the tax bill at the end of the year, there's enough funds in there to cover it. So they usually put anywhere from a 2 to 3 month cushion for both. And insurance is usually paid the first year in advance on the closing disclosure at closing.
So you will see those numbers in the closing disclosure for taxes and insurance.
Yeah, and if you don't escrow,
for this example, we're escrowing. If you don't escrow, you're on the hook. You're on the hook for that tax bill when it comes up.
Mm-hmm.
the way I say it is like, look, if you're good at tracking your funds and you're good at setting aside the money, you could look at not impounding taxes and insurance, but it certainly is easy. Have it done, have it sitting there. You don't have to worry. Servicer pays the tax bill. It's a pretty clean way to do it. All right. So now we need to look at debt to income. So Gary, why don't you tell us a little bit about debt to income and then how, and the 50%, what that means for the purposes of a conventional loan?
Yeah. So this is your buying power, right? This is the ratio that makes or breaks most deals and establishes how much you can afford, right? So in this case, I'll give, do we have income in the next slide?
No, because we're determining how much you need to make.
Got it. Okay.
Right. So we're saying that we're looking at a DTI of 50%. Right. So our total annual housing expense is the 39,531. Yep. That's just literally the number multiplied by 12.
Yep. Yeah. So essentially what we're doing here in this case, we're taking how much your payment is annualized and then taking that number and dividing it by 0.5, getting us to a number of 79,062. So you need to make roughly $79,000 to make this payment. Now, this is not including any other debts. I think it's important to understand that if you have a car payment, you have a couple credit cards, anything like that, then we need to add that in. And so that number will be added in. So this is a raw number without any other costs, anything like that, any car payments, personal loans, student loans, any of those other things that go into it. So in this case, you're taking that original loan payment of around $3,200 all in, adding that up over 12 months, dividing that by 0.5, and that gets you that 79,000. So someone that's making roughly $79,000 can afford a $500,000 purchase, assuming they have good credit, or not necessarily good credit.
Yep.
Credit that we can work with, typically over 620 on conventional, 640 in that ballpark, and then get you in a position to be able to purchase this place.
Got it. All right. So purchase price, $500,000, down payment, 20%. Well, again, we're looking at conventional. That leaves you with a loan amount of $400,000. The principal and interest on that is $25, $28, $27 a month. Taxes we said are $416. Insurance we said is $350. And that total monthly payment is $32.94.27. And that annualized cost can only be 50% of your income. And again, we can't emphasize enough, this is assuming no other debt, right? So you have to include the housing expense and any other debt that you have. To Gary's point, if you have a car payment, you need to add that to the housing expense and make sure that all of that is below 50% of your gross annual income to be able to qualify to purchase.
That's correct.
So that pretty much sums it up, right? That's what you need. That's the math. That's a simple math. We did talk about PMI, private mortgage insurance. So if you are putting less than 20% down, you would have to add a mortgage insurance cost to this equation. And we would calculate that out to determine what that is. But, there is an advantage, obviously, of being able to put less down, but you do have to pay mortgage insurance, which, is nothing. It goes against your debt to income, and it is part of the equation. So if you can get to 20, do it.
Yep. Absolutely.
Awesome. So this sums it up. This is what you need. If you're going to want to purchase a $500,000 house, this is the math you need to follow. Any other questions you guys have, leave them in the comments. Any other scenarios you want us to run, leave those in the comments as well. We'll be happy to answer them.
Awesome.
Thanks everybody for joining. We'll do more of these as the scenarios come in. Have a great day, and a reminder, give us a subscribe, like, and throw us some comments. We'd love to hear from you. Have a great day.